So what Morgan Stanley does is they go to their favorite pals, the people who can buy big blocks of this IPO.
That's right.
They give them information, and they say, oh, by the way, you might want to know that our own analyst said that this needs to be marked down because of the mobile advertising market does not have the same value as the set advertising market. Is that?
That's absolutely right. They've got a guy at Morgan Stanley named Scott Devitt, and he is their top analyst on consumer internet companies. And he looked at some communications that have been made from Facebook regarding their mobile applications. And he said, this is going to impact revenues pretty significantly, and I'm going to internally tell the traders at Morgan Stanley that I'm going to cut my revenue estimates. And
didn't tell everybody that, but told his insider pals that.
Yeah, he told the insider bankers, and then the bankers at Morgan Stanley would tell their big clients. Not the mom and pops. They're telling the big hedge funds that have billions of dollars and are investing. Look, it's not what it's cracked up to be. This Facebook IPO. The price isn't factoring in this. This news will hit at some point. It's going to hurt the stock value. So all these hedge funds knew that the game was rigged from the beginning. So $38 is the price that comes out. And when the information comes out about the analyst cutting his revenue numbers and that 2012 is not going to be as great a year for Facebook as we originally thought, well, those individuals, those few hedge funds, when they see the stock trade on the open market, they start dumping their shares.
But mom and pop, who, again, these are people, mom and pop investors, rely on this for the retirement. Okay,
That's
they're
right.
in pension programs. So they're not being told, oh, by the way, Scott Devitt told us that we've got a problem. And why is that? Why didn't they tell everybody? Let's just say what it is, James.
Well, because if you told everybody, you'd have to go back and reprice.
Right.
And then Morgan Stanley makes less money on the IPO. It prices at a lower price. They don't make as much in fees. And the other thing that's going to be overlooked, and it's coming out today, that Morgan Stanley made $100 million profit stabilizing the stock.
They even have a name for it. It's called gun jumping or something like that. Insider information is different from the outside prospectus that's being told to the general population.
They've got all the information that they need to weigh it, and they are not letting the investment public know any of that information. And why? Because they're going to find a way to make money off of that advantage.
This is Morgan Stanley's project. They made $100 million. They made $100 million, and they can't get this right.
Well, yeah, it's definitely on Morgan Stanley in trying to get the everything lined up. It's also on NASDAQ in that they had plenty of warning that this was going to come out, and they couldn't process orders correctly, which is their absolute business. And
this is all they do.
It is their business, is allowing stocks to trade and to have orders being taken. That's what you do. You should be able to handle it.
They work completely with immunity. They do whatever the hell they want to do when they want to do it because they know nobody's ever going to put them in handcuffs. But when they break the law, they go have a martini. When the typical citizen breaks the law, they're probably going to go to jail or at least be indicted and tried.